Okay, let's turn to the recovery in the airline industry, which seems to be well underway. Take a look at this. This is based on stock performance. This is the NYSE ARCA Airline Index, up more than 46% over the last year. And the 6 largest U.S. airlines have built up a $23.8 billion cash hoard to cut debt and build a cushion against future crises. Well, Hunter Keay, an airline analyst at Stifel Nicolaus, joins us now live from Baltimore. Welcome, Hunter. Good to see you.
Thank you, Lisa.
By the way, according to Bloomberg, he is a top-ranked analyst for Delta and United Continental. So let's talk about 2010. We just took a look at that stock chart, the index for the last year, up more than 46%. Can we expect the same in terms of stock performance in 2011?
Yeah, I certainly think in a recovering economic environment, the airline sector has the potential to drastically outperform the broader markets by a comfortable margin. You saw the index itself was up 46%. That's significant alpha over the S&P. And some of the big winners in the space, like United, Continental, and U.S. Airways, were about 130% year to date. So I think as we move into 2011, as long as consumer spending trends continue to improve and business travel continues to recover, I think you should probably expect these guys to outperform the S&P comfortably again next year.
You know what? We talk about business travel being sort of a key to the industry's recovery. Is that a trend you expect to see develop going forward in 2011? Is that one that's going to, it was hurt pretty badly, I guess, in 2009, 2008?
Yeah, it was absolutely dreadful in 2009. 2008 was the worst year in the history of the industry until 2009 came along, and that was driven essentially all by business travel evaporating. So as we're recovering, 2010, as you mentioned before, has been sort of a year of recovery. We're still below year-over-2-year levels, and in some cases year-over-3-year levels. So there's probably a little bit more headroom as, again, as long as the worldwide economic recovery continues at this gradual sort of protracted pace, there's more headroom to go on the corporate travel side, and that's very beneficial for margins.
Hey, let's quickly talk about December travel trends. In our country, at least, it's a very popular time for travel as people travel for the holidays. Over in Europe, clearly quite a mess over there. How is that going to impact the travel trends for this month?
Well, you know, it is a mess, and airlines do budget in some, you know, excess cash, some expenses for some weather-related issues. And November was a very clean, sort of event-free month. Revenue was very strong in the month, very little traffic, weather-related traffic disruptions. So probably you can have a little bit more buffer on the expense side in December. But again, I mean, if it continues to be sort of disruptive into the Christmas travel period, yeah, that's going to cause some disruptions and maybe some measurable impacts. But hopefully they have a little bit more wiggle room on the expense side through the end of the year because November was so clean.
It's so strong. Okay, well, let's talk about the biggest challenge facing this industry next year.
Yeah, I think the biggest challenge, obviously, you've got the macro stuff. You know, you've got the exogenous potential, shock potential, things of that nature. But within the things that are controllable within the airline industry, it's capacity. It's what it all comes down to. It's economics 101, supply and demand. Airlines need to make sure that they stay disciplined on the capacity side. Do not add marginal capacity in markets that doesn't need it. And as long as you do that, you should be able to price through your product, layer on things like fuel surcharges much more effectively than if you're adding marginal capacity that shouldn't be there.
You know, let's talk about a few of the companies you like and one that you have on hold right now. You know, what's driving your individual view of these stocks?
Yeah, so, you know, on the large cap side, our top pick right now is United Continental. That's the merged company between United and, of course, Continental, ticker's UAL. We have a $38 target price on that. The stock is off about 20% over the last month or so, I think largely because of some uncertainty relating to how people actually model this company. There's been some difficult sort of pro forma adjustments. Numbers probably need to come down a little bit here in the near term. But still, we like that earnings acceleration into next year. I think they're going to probably outperform their peers on revenue acceleration because of a number of unique factors. And on the small cap side, we lean towards Hawaiian Airlines. Very unique growth opportunities. They might actually grow their capacity by about 15% next year, but it's probably going to be at very margin accretive levels into new markets like Tokyo and Seoul, which we're pretty excited about the prospects for them too. So Hawaiian and United Continental are our top 2 picks going into next year.
And then Hunter, why do you have a hold on Southwest and JetBlue?
It's predominantly valuation. I mean, those are both very good airlines. You know, they have very good ratings from the consumer perspective, but they're trading at multiples that are 3-4 times above that on a relative basis among some of the network carriers, despite growth prospects that, frankly, in our opinion, aren't as attractive. You know, the domestic market is saturated. You know, Southwest has some opportunities to connect some dots in a pretty compelling way with this AirTran merger, which would close around April of 2011, but they're just not going to have that kind of international long-haul premium exposure, which we think is going to continue to be the catalyst for these guys well into next next year.
All right.
So it's a valuation call, and it's a lack of catalysts.
All right. Thank you so much. Hunter Keay joining us today from Stifel Nicolaus with a preview of what the airline industry holds for us in 2011.